Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. Today, we're going to mix it up. The episode's going to be a little bit different. We're going to try a new format, not dramatically different. We're going to keep it about 20 minutes. And welcome from the George Washington University School of Business, the GW Investment Institute podcast, coming to you from Duquesne Hall and the Duquesne Family Studio. Thanks again from that. Right here in the heart of Foggy Bottom, Washington, D.C. Lots going on, but not the government. Still shut down. We'll see if it opens, hopefully very soon. All right, the format today's episode is going to take, what we're going to do is we're going to use the framework, BMPB, Business Management Price Valuation and Balance Sheet. But we're going to talk very quickly, let's say, more quickly than we typically do. We talk about one company for our whole episode, but we're going to go over a couple of, three companies actually that we own in some of our portfolios. Again, not investment advice, educational, entertainment purposes only, but that just announced earnings. And we're going to go through these companies more, not rapid fire, but certainly faster than we typically do. So we're going to try this new format. Love to hear your feedback. Do you like this new format as we, progress it out here? And as we talk about kind of a wrap up of earnings and a review of earnings, but through the lens of the BMPB framework, Business Management Price Valuation and Balance Sheet, for companies that, are topical to us and things that we care about and things that are in our portfolios. For the most part, obviously sometimes we'll cover companies that are not in our portfolios, but for these companies, they are. And so the drum roll there was to heighten the, tension here for what companies we're going to cover. The three companies we're going to cover are Apple, Amazon, and Tesla on this episode. So they all three just announced earnings. So we're going to go through the companies, go through the business, go through the management, go through the price valuation, go through the balance sheet, and talk about, and it's sort of also what's happening around the earnings. So we're not going to have a full 20-minute episode on all of these, so we'll have to move a little more quickly than we typically do, but enough time to talk about each one of these. So let's first start out with Apple. Apple, the business, right? What is the business of Apple? Obviously selling iPhones. Here is one. Again, not investment advice, but I do own Apple products. And, for my family, we're typically Apple products family. No Androids and no, threats to switch as of the moment. Don't have an iPhone 17, which lots of people have been upgrading. And we did do a little bit talk about that a few episodes ago, but it seems to be way more popular than people had anticipated. And so if you look at, what's happening on the earnings side of Apple? So let's talk about the Q4 fiscal year 2025 earnings. That goes through September 27, 2025. And so if you look at revenue, $100 billion, right? Over $100 billion. That's up 8% year over year. EPS 185 there. It beat, 177 was the estimate. Gross margins, nearly 50%, 47.2%, up 100 basis points. That's in line. Net income of about $27.5 billion. So look, these are great numbers. These are fantastic. Services have improved. And so if you look at, let's go back to the iPhone 17 and the Pro here have been pretty big hits. And I think the expectation was that, it was going to be kind of a meh, reception. And that was really the iPhone 16. People expected more out of that. And it didn't really happen. It didn't materialize. Excuse me. Drinking out of my George Washington University School of Business mug. Buy some merch, subscribe to the channel, of course. So iPhone 17 seems to be better, reception from the consumer than people had anticipated, and certainly much better than the 16. The 17 and the 17 Pro, demand is strong. Demand is stronger in the U.S. Demand is stronger in China than people had anticipated. Those are good things. And then you also now, a big part of the business now for Apple is services. And you look at, services all-time record, $28.75 billion. That's up 15%, right? Accelerating growth here. That is very good news. Those are high-margin businesses. So that's the App Store. That is the Apple Music and iCloud. All these things, all the services. So the platform is the phone. Over 1 billion users on that. And then through that platform, you're selling services. Very good. And then wearables doing fairly well. That's the watch and the AirPods. For example, and the Mac and the iPad not doing bad either. Excuse me. So pretty good here. Certainly in China, better than expected. U.S. better than expected. And we'll have to see here. Tim Cook, we're heading into the holiday season here. Excited about all the things that are Apple, and we'll have to see how that ends up. The cash pile here, $133 billion. So not necessarily worried about that. So we talk about the business, and we talked about those things in there. Management here, Tim Cook. Lots of people were concerned about maybe Apple has lost a step, and Tim Cook has lost a step. Not the case. Has shown his ability to be nimble and agile and maneuver this company, which is a huge company, one of the largest cap companies in the world, and really much more nimble than I think people expected. The market cap right now, $4 trillion for Apple as of November 4th here when we're recording this episode. So look, overall, business, fantastic. Services growing. iPhone 17 better than expected. Management, Tim Cook and company doing a great job. Certainly has been more nimble than I think people have expected here. And one of the criticisms rather for Apple on the management side is capital allocation and lack thereof on the side of AI. For example, if you use Siri and it's still terrible, well, join the crowd. We all are waiting for Siri to get better. They keep talking about it. What's the real AI plan here for Apple? And the other side of that is people saying, well, Apple is being careful. They're being considerate. They're being thoughtful. And their consideration for, let's decide, who we want to partner with after the winners emerge. And so if you talk about the $20 billion deal that they have with Google, that got upheld in the courts for the top position for search on Apple devices, maybe there's a similar deal coming for AI. And so that's something, to think about. That's something to consider. And that's something that I think as an analyst business person, you have to really consider for yourself and think, is Apple really sitting in pole position, even though it looks like it's not? Maybe it's going to let all these people spend all this money and then no problem. They're going to come swoop in, set up their own stuff, and be good to go there. So that is something to think about for Apple. All right. So that is the management piece. Now we'll move on to the price valuation and then quickly hit the balance sheet. Look at the valuation here for Apple. 32 times forward earnings, nearly 33 times. This is a great company, great business, great moat. Certainly durable competitive advantage, to say it that way. Has a huge network effect around its products and services, and so that's very good, and that is fantastic. And so, is the valuation justified? You could say it's a little expensive for what it is, and it doesn't have a big AI plan, but also it's a very sticky product. The services business continues to grow, and they keep pushing higher margin products through the platform. That's very good. And by the way, on the chip side, they keep improving their own designs and are producing very competitive chips in the market. Next up on the balance sheet side here, when you talk about, okay, what's the balance sheet look like? Well, it's pretty strong. As we talked about, really good earnings, really good free cash flow, and a really strong balance sheet. $132 billion of cash through September 27, $112 billion of debt. So net cash on the balance sheet, and not necessarily concerned. Not a cash neutral here, but also generating, by the way, free cash flow of $98 billion. And so really, when we talk about, okay, can you sleep at night? Sleeping like a baby at night with the net cash from the balance sheet, with the free cash flow. And if you look at the ratios here, not necessarily, you're not worried about, interest coverage ratio, right? The net cash plus the free cash flow, Apple's in great shape. So again, sleeping like a baby at night with Apple's balance sheet. So overall, going through the earnings, going through the BNPB, Apple's in a great spot. Maybe the valuation's a little bit high. We got to really watch what's happening on the AI. Tim Cook and company really delivered this quarter, and we'll be watching for the holiday shopping season. So thank you, Tim Cook. All right, next, we're going to talk about Amazon. So again, 3 companies this episode, BNPB for each one. But really the lens is the earnings, and the catalyst to talk about these companies is the earnings. But we also own all 3 of these companies. Remember, not investment advice. Entertainment purposes only, and educational. All right, so we talk about Amazon. So what's happening on the front of Amazon? If you look at the earnings, okay, well, what happened on the earnings? People were concerned, the last set of earnings, hey, by the way, AWS not growing fast enough. Microsoft Azure growing faster. Google Cloud growing faster. They're sitting at, a third of the market share for cloud, so they're still the big player, but they were like 17.5%. Last quarter, people really worried about what's happening at Amazon. And you get to this and you say, well, what happened this quarter? Well, by the way, AWS grew by 20%. And that, hasn't seen that growth, since 2022. Andy Jassy, who's CEO, talked about that, going very well. And so let's take a look what's happening on the overall numbers. Net sales talking about 180 billion. Beat consensus up, 13%. EPS 195, beat, 38 cents. So, look, things are going well. Operating income 17.4 billion, basically flat. Adjusted operating income up 25%. Net income up 39%, 21 billion. So look, what are the key drivers there? The key driver there is AWS. And so up 20%. Backlog here, $200 billion. Andy Jassy and company, I think, surprised some people, right? But Andy Jassy ran AWS and helped build AWS. And so maybe it shouldn't be a huge surprise that there's an emphasis on really growing that. They just announced a deal with OpenAI to make NVIDIA chips available immediately. Look, then they have their own Trainium chips. And so I think that's something to watch. The Trainium sales up 150%. So that's something that I think we've talked about before, but I want to put a special emphasis on the Trainium chips and their ability to deliver those. And look, as an investor in NVIDIA, do we worry about Trainium? Maybe not in the short term, but certainly, as their chips get better, then it's price performance, right? It's not just about like high performance, it's price for performance. And the Trainium chips are a good value, and people are finding good value there. And they're launching a system for Anthropic. And so the Trainium chips, something to watch. AWS in general and the Trainium piece of their own chips. They design them. TSMC, Taiwan Semiconductor, manufacture those chips. They just did an episode on TSM ticker. So all good. The other piece that I think is interesting and worth watching on the business side, so that's the cloud is obviously the B here. We're talking about, again, through the lens of earnings. On the earnings side, business, advertising up 24%. So you're really talking about, it's a competitor now with Google, with Meta. And I think it's an interesting part of the business that I think people should be paying attention to. And so I do think that is absolutely worth watching. Online sales up as well here. So overall, really good here. AWS earning big enterprise margins, 20% growth. Fantastic here. There was some layoffs there, and so some people are attributing those. They were, financial. They were AI, and they're saying that they're cultural. So we'll have to see what's happening there. But certainly, if you're getting more efficient here, it makes Amazon more efficient overall as a company. I think they're absolutely one of the leaders in AI, and they have a platform to deploy it across the board here. AWS, Trainium, all the robotics that they have already in their warehouses and how they can deploy AI throughout that. They have a scale advantage versus everyone else. So I do think there's some really interesting things to watch here for Amazon, and, click and pick up at your front door. That's what people do for a lot of stuff. So the convenience is fantastic, and they're even doing that on the AWS side, or continued rather to do that on the AWS side as well. So business overall, obviously doing super well. Andy Jassy now moving on to management here, talking about people concerned about growth of AWS. It surprises a little bit to the upside, 20%. Stock obviously moved up big if you were watching, over 10% on the day, and another 5% the day after that. Really fantastic earnings and beat and guide up. And so fantastic job by Andy Jassy and company. And people, I think, doubted, okay, well, maybe AWS is slowing down. They're losing market share to Microsoft Azure. They're losing market share to Google Cloud. And they both reported, and we'll talk about those maybe on another episode. But the big player, a third of the market is AWS, and they came through. They delivered 20% growth. Really fantastic. Great job by Andy Jassy and company. And they continue to deliver on multiple fronts, and opening or announcing a deal with OpenAI as well. The Trainium chips, again, 150% increase there. Pay attention to what's happening with their own chips in that world. I think it's really important. Kudos to the management team for being forward-thinking and thinking about investing resources and building out their own designs. Again, TSM manufactures those chips for them, but I do think it's a tip of the cap to them to be forward-thinking that how they can also try to, have another competitor of their own that they control to help them on the pricing. Obviously, they're still deploying, chips that are the GPUs from NVIDIA, and OpenAI deal makes the point about that. So they still have lots of GPUs from NVIDIA, but they're also deploying their own as well. And so Again, very important to watch. So management, excellent job. If you look at the what's on the price valuation now, moving on to where Amazon is, not super expensive. 29 times forward earnings. Again, you wouldn't call that ridiculously expensive. Certainly not for a company that sits at this, I think sits at the center of AI for multiple different fronts, or has a position at the table. I don't know if you want to call it the center. Maybe that's NVIDIA right now, but certainly is a company that sits in a very, very unique position for AI, and for other things as well. All the convenience that people use Amazon for, 29 times. I would think that that's not an enormous multiple for a company like this. Next up is on the balance sheet side. So if you look at what's happening for Amazon on the balance sheet side, we are talking about $94 billion in cash, so a little bit of net debt, not necessarily worried in generating $10 billion in free cash flow. And if you look at what's happening in the free cash flow side, a really big move on the upside there. So if you look at, so not really worried here. Again, generating lots of free cash flow. 2021 free cash flow minus $15 billion, and it was minus $16 billion in 22. And then you go to 23, $32 billion plus in 24. Through the 930 last 12 months, 10, and looking at 15 nearly for the full year 25. And by the way, that's after expecting to invest $122 billion in capex this year. So these are enormous numbers. These are big numbers. And so deploying lots of money, and that's principally for that AI trade. So even after that, producing lots of free cash flow relative to its debt service, and so not necessarily worried about the balance sheet. We'd love it to be a little bit better here on Amazon, but certainly not concerned given the strength of the business, the strength of the free cash flow, and the strength of its position on AI. So overall, again, Amazon down on the day today, but certainly up big after it announced earnings. Excuse me. Drinking from my GW School business mug here. Next up is Tesla. So what's happening on the Tesla side? They also announced earnings. We'll go through BMPB here for Tesla business management, price valuation, and balance sheet very quickly here. The company that we're going to cover in this episode. So let's go through it, and we're going to kind of speed through this one a little bit faster than the other ones to keep our episode around 20 minutes here. So when you talk about Tesla, obviously people are very worried. The tax credit came off. And so you're going to have a bump up probably, in deliveries, and next quarter might not be quite as good. But let's look at the numbers. So total revenue, $28 billion, up 12% year over year. That's a beat. The automotive revenue up 9%. So generally good here. And let's get down to free cash flow, $2.7 billion, up considerably, 95%. And the cash and cash equivalents, all-time high, $41.6 billion, up $8 billion. That is really fantastic news, the year-over-year change. And so these are stellar numbers for Tesla. And something that I want to call out, and on the business side, we're in the B part right now, in going through the earnings, is a record 12.5% gigawatts deployed, and revenue up 50% year-over-year for the energy segment. And so energy storage and the energy business is growing. And if you think about, and if you listen to the call, Musk had said something that I think is important to consider, is that if you look at, there's a terawatt of deployed, a potentially deployed, production, but at any one time, you're only using, 500 megawatts of that, or gigawatts, I guess, of that, terawatts and gigawatts. So you have, half of that maybe without having any additional production be put online, if you could add battery storage to the grid at large here, and capture all that, you can double the productivity of the current grid without adding, any nuke or gas or solar or wind or anything else. So without that, just by adding batteries to all of these things and having systems to back up, 100% of that gets you to doubling the capacity. So I do think, they're selling these things as quickly as they can effectively, and you have 50% year-over-year growth, and it's becoming a meaningful part of the business. And so I do think it's important to watch. I do think it's a very important business to watch. And they also have a software that's in here that's called Auto Bidder, and I encourage you to check that out on the business side. Basically, electricity trading software. not a ton of time to deep dive on this, but I think that's super important. And also think about the services and supercharging. That's up 28% year over year. So if you look at the supercharging fleet, continues to get built out. So all good there. But again, on the business side, you get the tax credit coming off. We'll have to see how this all plays out. But the big things to watch are the autonomous driving. Version 14 came out. Widely regarded as a positive upgrade here. Got to smooth the edges, as Musk said. But the future really is in the autonomous driving business and the Optimus robot, which I think we do need to pay attention to. But I think also pay attention to the energy side and what's happening on the energy business. So that's the business management. Musk continues to deliver. If you haven't voted your shares, make sure you do. Whatever it is, their pay package is coming up. I think exceptional good capital allocation here and really focus on the future, building at scale on things that are important and things that will really move the needle. So tip of the cap there. On the price valuation, let's just take a quick look there. This is oftentimes where people also get critical on Tesla here. The forward PE is 272 times. So think Palantir is in that same category right now, and so these are big numbers. But if they solve full self-driving, if they have this Optimus robot, lots of people are putting some bets into that, and or betting that some of those things will materialize, and maybe that would justify that multiple at this moment because it would make Tesla a much bigger company. And then on the balance sheet side, we talked about this record $40 billion in cash on the balance sheet, so not necessarily worried on the balance sheet. So overall, all good metrics. Let's say maybe not all good metrics overall, rather for Tesla going through the BNPB, all good. Let's say overall. We'll have to continue to watch all these companies. So we're going to keep an eye on Apple. We're going to keep an eye on Amazon. We're going to keep an eye on Tesla. Our stock pitch days are coming up, and we'll hear from our students how they're doing and what they're thinking, and we'll see what comes into the portfolio. That is it for this episode covering Apple, Amazon, and Tesla, and we'll see you back on the next episode of Market News. Rodney Lake, thank you. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.